It's either going to zero or it's going to a million. If it's not going to zero, it's going to a million. There's a massive battle between the bulls and the bears, the skeptics to the haters. They think it's tulip bulbs. They think it's nothing. They don't understand it. Therefore, it must be worth zero. And the bulls say it's the future world reserve capital network. And everybody with any amount of money in Africa, Russia, China, South America, Europe would prefer to own Bitcoin than a building or a natural gas field or a bunch of bonds or a company. And so as we win that narrative, and as you have expressions of confidence and acknowledgement and respect for the asset class, you're going to see massive pools of capital surge into Bitcoin. The price is going to move up, and a lot of people will buy Bitcoin.
Bitcoin is headed for one of two extremes. Either it will go to zero or soar to $1 million. According to MicroStrategy Executive Chairman Michael Saylor, the bulls are currently winning the battle. Large pools of capital are steadily flowing into Bitcoin, driving its price ever closer to the $1 million mark. In a recent interview, Saylor explains why Bitcoin is the only asset anyone will ever need to secure their financial future. He believes that everyone should consider shifting their savings and investments into Bitcoin, given its growth potential and stability compared to traditional assets. Make sure to stay tuned until the end of the video, as Michael Saylor elaborates on why it's essential for both individuals and businesses to own Bitcoin, especially in today's economic climate.
Hi guys, hope to see you guys at Dubai Token 2049. We have exclusive 10% off the limited super early bird tickets. Click the link below. This pass will grant you access to speaking sessions, networking app, exhibition hall, daily networking drinks, and also included breakfast, lunch, and coffee breaks, all included the package. I love to see everyone there. Peace out.
I think every company in the world should recapitalize on Bitcoin. So like that's 400 million companies. So I think all 400 million should. I think every family, every individual should. I think every government should. I think Microsoft should recapitalize on Bitcoin. I think your bakery should. I think all the Bitcoin miners should. So yeah, everybody should recapitalize on it, right? You're talking about capitalizing on an asset that's 60% ARR, 60 vol, instead of an asset, the US dollar, that's 0 ARR, 0 vol. Another way to say it is, I think we ought to put an internal combustion engine in every horseless carriage. I think we ought to put a gasoline powered engine in every house, every plane, well, every train, every automobile, every factory, right? I mean, I want to put a fire in every vehicle on the planet. That's what Henry Ford did. That's what John D. Rockefeller did. They put a fire in everything. And I think you could think about this as a crypto reactor fueled by Bitcoin. Bitcoin's the fuel. It's a crypto reactor. We should put one in everything. Now, in terms of the business model, let's think about the generic idea. The generic idea is you have assets. If they're going up 0% a year and the cost of capital is 15% a year, you're losing, it's minus 15% a year. Your capital is being destroyed. So that's the US dollar treasury strategy. The Bitcoin strategy is plus 45% versus the cost of capital. So everybody can do that. Meta, Apple, Microsoft, Disney, everybody can do that. Every Bitcoin miner, every company on earth, like Disney Corporation, like Apple, if they simply switch their treasury to Bitcoin, they'll probably double their growth rate and double their market cap. Okay. And they will cut their risk in half. Okay, so anybody can do that. That's very simple.
Why do you say they would cut why do you say they would cut the risk in half?
Okay, let's take Microsoft. Microsoft right now has a market cap that is 95 to 97% valued on forward expectations.
Correct.
And its multiple to NAV is 20. People talk about multiple to NAV, right? Well, multiple to NAV of Microsoft is 20. And that means that for every $20 in market cap, they have $1 in some tangible asset. And so the other $19 are based upon like 144x multiple of quarterly earnings. And so if if they were to ever announce that they think their quarterly earnings will be down by 30%, you've got like $1 trillion of market cap that evaporates overnight. So most companies, they don't have any assets. Most operating companies don't. What they have is forward expectations. And that's why you see these stocks crash all the time when the company has an earnings call and they say, we've taken down guidance. When, if the CFO says, well, I think the guidance will be like, 6% instead of 9%, your $2 trillion company becomes worth $1 trillion in 1 minute. Now, how does that work with institutions and foundations and wealthy people? For example, how much of Jeff Bezos' wealth or Bernard Arnault's wealth or Elon Musk's wealth is based on forward expectations? And the answer is none of it. Actually, their wealth is based on the actual assets they own that are marked to market. Like if you go to Harvard University, Harvard might have a $20 billion endowment. And you're like, well, the endowment's worth $20 billion. Well, how much of it is the forward expectations of the profit from the university? None of it.
None of it.
See, none of it. So the wealthy in the world, they're valued based upon assets they own. I know a lot of billionaires. They're like, well, we don't really want to own operating businesses. We want to own property business. Like I give you a choice. You can have a business that makes $100 million a year, valued at 100 times expectations, or you can have $10 billion worth of actual property outright. Which of the two of them do you want to own, right? Of course, the latter, because you don't have to do anything. On January 1st, you get up, you own $10 billion of property, the money printer runs. At the end of the year, you own $11 billion of property. You made $1 billion. What did you do? Nothing. So the irony, of course, is people think it's risky to own Bitcoin, and they think that that they're stripping the volatility by getting rid of their capital, dividending it out, and buying back their stock. And the truth is, it's the opposite. When you're taking all your capital, investing it in bonds or buying back your stock or paying dividends, you're stripping the real productive assets from the balance sheet. You're levering up the company until it's trading 100 to 1 against quarterly earnings, or 200. There are literally companies with no assets that have $4 billion in earnings a year that are worth $200 billion. And they're trading at insane multiples. And if they basically put out a press release saying we think next year will be half as profitable, the company loses $100 billion overnight. So I don't want to get distracted on this because I want to make my bigger point. What I'm saying is every company in the world, operating companies, public companies, they're actually running without any assets, without any capital. 90 to 95% of the company's market cap is just forward expectations that are subject to crash anytime. So buying Bitcoin de-risks that. If we come back to the Microsoft example that I laid out in my presentation to the board of Microsoft.
Forward expectations are based on the assumption that a company will continue generating profits at a specific rate in the future, and this prediction influences the company's stock price and overall market value. For example, a company like Microsoft may have a market capitalization of $2 trillion, but only a small fraction of that value is tied to physical assets or cash reserve. The majority, sometimes up to 95%, is based on assumptions about future earnings. If the company fails to meet these expectations, its stock price can experience a sharp decline. Michael Saylor argues that owning Bitcoin can reduce reliance on forward expectations. By holding Bitcoin, a company can diversify its balance sheet and secure a stable, appreciating reserve. This helps mitigate the risk of sudden valuation drops caused by earnings reports or shifts in market sentiment. While Bitcoin's price may be volatile, its long-term growth trajectory makes it a more predictable and reliable store of value compared to expectations that can disappear overnight. Let's return to Michael Saylor as he expands on this point further.
If Microsoft converts to the Bitcoin standard and they start sweeping their cash flows, their dividends, and eliminate their buybacks, over 10 years, you end up with a situation where the company generates $4 to $5 trillion of Bitcoin value, and it might be worth 10 trillion. So 50% of the market cap of the company is based upon digital capital. Right now, 95 to 98% of the company is based on expectations. So you see what you've done is you're acquiring property with your cash flows instead of surrendering your capital. That's why I think that any company in the world should do it. You de-risk the stock and you double the asset value of the company, and you decrease the stress on the management team and on the employees. And that means you don't have to force your customers into 3-year enterprise agreements, bundle all your products in and sign them to a 3, 4, 5, 10-year lease. And if you look at big companies like Apple and Microsoft, increasingly and all the big software companies, they go to long-term enterprise agreements that look like rental contracts. And those rental contracts put stress on the customer, they put stress on the management team. Eventually what happens is the customers and the partners complain to the regulators, and they want you to be a regulated monopoly. So if you strip your assets from your balance sheet, you're on a road to serfdom. You're going to end up as a regulated utility company, like a power company or electricity company. That's why I say every company can benefit. Let me go to the next model. The next model isn't MicroStrategy. The next model is any company that has assets like real estate or art or energy that is not that interesting to the market, where it returns less than the S&P index and has less volatility. That's dead money. That's a zombie company. You either can't take it public, or if it's public, everybody loses interest. If you recapitalize that company with Bitcoin, you take 7 vol, 7 ARR art, and you add 60 vol, 60 ARR Bitcoin, and you do 1 for 1, you end up with 35 or 40 vol, 40 ARR digital art. Now you can take the company public. Now you are going to outperform the S&P. Now you can raise billions of dollars of capital. Now people will trade your options. And now you've actually got a very hot stock. So you can fix any zombie, or you can monetize art, real estate, or any other asset class by bolting on Bitcoin instead of gold plating something. Like if I wanted to monetize a lighter or a pen, I would gold plate it in the gold era. I would Bitcoin plate it. I put a crypto reactor behind my art company, or behind my real estate company, or behind my energy company. And now I outperform the S&P. Now, the third business model is the MicroStrategy model. We're a pure treasury company. So what we're doing is we're creating a Bitcoin reserve, and we're stripping the volatility and the risk to create fixed income, low risk, mid risk, high yield, and then a Bitcoin type performance, and then a 2x, and enabling a 3x, a 10x, a 20x on the options ladder. So we're a pure play. The answer to your question is most companies won't do that. I mean, Metaplanet might. There could be like a company like MicroStrategy in every market. There could be one in Japan. There could be one in the UK. There could be one in Brazil. There might be 2 or 3. So there will be some of them, but that's a special class of crypto treasury company. That these other companies, the zombie companies, juice their company. They're going to basically do 2 to 10x by putting Bitcoin on their balance sheet. And then all of the well-run traditional companies like Microsoft, they're going to 2x their market cap, and they're going to cut their risk in half. Those are the 3 business models. And I think that all of those are probably the most interesting thing going on in the world.
Here's Michael Saylor explaining why every company, government, and individual should consider reallocating their capital into Bitcoin. It's a powerful asset that provides stability, growth, and a way to mitigate financial risk. As adoption continues to rise, its price is set to soar. So, it's wise to own Bitcoin now, while it's still far from reaching $1 million. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.